So I I get really frustrated because everybody's like, well, I gotta wait until I get 20%. And you don't need 20% down to buy a fucking house.
Right.
That's the mood I'm in today.
It's the week.
Okay, so what percentage of down payment do you need to buy a house in this country, Miss Jen Leon?
You need 3% down is all you need.
Awesome.
Yeah. And you can even find loans that are zero down. So VA home loans, right? If you're a vet, zero down. If you buy in a rural community where the population is pretty tiny, you can do zero down. Um, Both of those programs are great. VA loans are amazing. I love doing any financing for veterans, always. But reality is most of the population's in the 3% down. And we've talked about removing PMI out of a payment before. We'll probably
We'll
circle
talk.
back to
Yeah,
that again.
we'll talk. So
Yeah.
hold on a second. So I feel like the 20% down is almost like our grandparents like advice. Like
Yep.
I feel like there's a lot of advice that just doesn't apply anymore that gets in the vernacular. You know what I mean? Like it's very so much what it is. So part of the reason why the 20% down thing like really stuck in the past, I think, is our parents and grandparents did it. But also that's when anything below 20% down is when we have to pay mortgage insurance. Can you please describe what mortgage insurance is?
So mortgage insurance is an extra
It's
monthly
it's
cost.
a racket.
Yeah, well, anything in the insurance industry is, isn't it? I
Yeah,
mean,
for sure.
you can't do anything without insurance. So, okay, basically mortgage insurance is when you do less than 20% down, there's this extra monthly cost to your monthly payment. And when you do 20% down, that goes away. There is no expense for mortgage insurance. So the insurance industry said to all lenders, hey, if your clients are putting 3 to 5 to 10% down, we will back that loan if they default. So it's very much a risk type thing for a lender. It is very credit score sensitive, meaning that if your credit scores are north of 700, you're going to find the pricing is higher monthly. So everything on
Wait, what?
insurance, yeah, everything's based on credit scores.
So wait,
And
if your credit score is higher, then you have a higher mortgage insurance?
no,
Oh,
sorry, it's the other way.
if your
So
score is lower than 7, you
yeah,
get
sorry,
your rate. Okay, I was like, wait the
meant to
fuck, and
say
that doesn't make any
south,
sense.
meant to say south, not north.
Cool. Let me get
But
my
yeah,
compass out.
right. So it's 700 and below, you start seeing the costs start to go up. And so when you're looking at a monthly house payment, people are very sensitive to what that total output number is. And you start
As they
jacking that
should.
shit up, as they
Yeah,
should, right?
yeah.
It has to be sustainable. But that's what mortgage insurance is in general. It's just an extra default expense to your payment to cover the lender in case you walk. That's all it is. It's a complete freaking waste of money if you can get out of it.
Right.
So let's say you do 3% down, you buy a house, you close. You can get out of mortgage insurance. And Lauren, you've talked about this before about getting out of it on your own house. Putting 3% down, the requirement is that you have to make 24 payments, not in 2 years, but 24 payments. So
Oh, I've
what
been telling
what
people incorrectly.
that's okay. That's why I'm here. But
Exactly.
basically, it's 2 years is the minimum, and then you then have to tell the bank, okay, I need to now get an appraisal because I have to prove that the value is X, and your
Hmm.
loan balance at that 2 year mark is 75% or less of X. So basically, what the bank wants to know is, do you have 25% equity? Great, here's the appraisal to confirm that, and goodbye PMI. So doing 3% down and paying that extra layer to your payment may be okay if you need the extra cash you planned on using for down payment for other things you want to do to the house. At the end of the day, putting less down means a higher payment. So you have to be okay with that too. So that's what has been super popular in the past couple of years because our values have been going up. Is people are just calling me saying, hey, I've made, 24 payments. How do I get out of this racket? And I'm like, here's the information.
And it's usually like, it's something like, it's like $800 maybe ish.
It's about 800,
Yeah.
750, 750. Yeah. And it's not a terrible, it feels expensive to me when I hear that number, but at the same token, it's also a really cool report to get on your house, just to give you a real weighted value on your home. But honestly, I think a real estate agent could actually do the same thing. Personally, it's just pulling comparables. So,
well, pulling comparables and like seeing what updates you've done since you've owned it too. Question for you. Oh, fuck, it's gone. Oh, so no, not a question, a comment. I think that there's a lot of people that say like, one, they think they have to have 20% down, and I want to scream because like I don't know how many different ways we have said you don't need 20% down, and it's like they just don't hear it, or it's very interesting. So what do you need 20% down? No. Okay. Over and over again.
We should make a song.
I know we should. Ooh, we could do a TikTok.
Money.
Not 20. Yeah. Not 20. Sorry. So I feel like a lot of people are like, oh, I want to save. And I think the biggest thing right now, oh, that one dead. I think one of the biggest things right now that I tell people is like, we're still seeing double-digit appreciation.
Yep.
Which means this, and if you're saving, I have to do this. If you're saving, you're never going to unless you can save as fast as the appreciation.
Right.
You need to just fucking get into a house. Like, I think that's, unless you literally don't have any money and you actually do need to save, but people have this mental, stop where like, I have to have this much money in my bank account before I can do anything when they haven't actually talked to a lender. So
right.
My biggest thing is like, I should have brought my little calculator because I can't use it on my phone. So my thing is like, unless you can save faster than things are appreciating, which very few people can, then you need to just fucking buy ASAP with whatever down payment you can and just get your foot in the door as a first timer.
Yeah, an example would be if your house or the area is appreciating at 10% annually. Let's just throw the number out there.
Oh yeah, that's easy.
Is that okay? So that's easy. So that would be 10%.
Let's say like on a $500,000 house, our median house price is like $550. Yeah, it's something like $550 right now.
So $550 times 10% is $55,000, right? So that's easy math. So you would have to cough up $55,000. Whereas honestly, you won't save that money as fast as just like what you're saying versus the appreciation. So it begs the question of, well, why are you putting that much into it? Well, I need my monthly payment to look like X. That's fair.
Yes.
Because at the end of the day, that is really the most important thing is the payment okay. But a lot of questions that I get, and I'm going to shift it a little bit, is just what is acceptable for down payments.
Yes.
And there's a lot of misconception about that too. Money in your pillowcase is not fucking acceptable. Okay. I can't take a picture of it. I have no way of documenting it. I have no way of knowing where that money came from. So that's
what about in my couch, in my car, in my attic? No, none of these.
In your tampon box? No, none of it. So
boo.
It doesn't matter. But there's it's funny. There's very few down payment options that actually don't work. And there's way more options that do work. So that's the good news, right? Okay. So here's the obvious stuff. Bank accounts, my checking, my savings, mutual funds, whatever. 401ks, you can tap your 401k. Usually you can take up to 50% of the vested balance and you can use that for down payment. Okay. gift funds, which we talked about, and I'm going to circle back to that because I actually pulled up that estate number we talked about last week because it was bothering me. So I'll come
Oh
into that.
yeah, good.
Selling assets. I sold my car. I sold some gold. I sold this. I sold that or this. As long as you can document the sale with a vendor or a bill of sale with a car, and you prove that you've gotten a check for the sale of the asset, that is okay for down payment too. What you can't do is say, I sold my 1970 Pinto that's rusted out in the junkyard for $75,000. And look, here's my documentation when that Pinto's worth about 150 bucks.
God, not a lot of Pinto love today. Jesus Christ. And Portland Homestead,
no Pinto.
This is Jennifer Leon. She is one of my favorite lenders. She's at Umpqua Bank, and she is very smart and beautiful.
Oh, thank you. You're so sweet. Here's a new one that is going to probably be more of a thing. Sale of cryptocurrency.
Yes.
You can sell cryptocurrency. You have to have it sold and deposited to your bank account. So you can't just say, hey, here's my app and here's my balance. That's not something anybody's going to take or accept as cash. But I've got a healthy amount of clients who have cryptocurrency, and they're like, okay, the only problem with that is it's so volatile.
Well, and the tax on it.
It's no different than mutual funds.
Right, but it's like you're still going to pay, you're going to pay capital gains on your investments. And I think people always forget that. So I like to just, still something you're going to have to.
Crypto's like a savings account, technically. It's,
is it really?
It really is. It's such an interest because it's, I mean, think of, I don't even want to get into this.
Okay,
but all I think about is little gnomes in these little caves, and they're whittling away at these little bitcoins, and they're saying, here's a fraction of it for $32,000. I don't even understand where the value of crypto comes from, but
that's a whole other conversation that I'm sure.
It is a whole other conversation, but it's an allowable down payment. Equity loans, we talked about that last week. I have a house, I'm going to take an equity loan, I want to buy a new place. Totally acceptable as cash for a down payment. Borrowed funds is fine.
Who can you get a gift from? Because this one gets really. And how much of a gift can you get?
Ooh, we're gonna go right into that one.
I'm just gonna do it.
Yeah, my CPA said unless. So let's say I'm gifting you money.
Okay.
And I say, okay, Lauren, here we go, honey. Here's your $3. I'm gonna write a check and mail it. As long as the estate value is less than 11.7 million. I laugh because I'm like, who the fuck needs a loan? Anyways, if it's 11.7 million, me getting taxed on giving you money is not a thing. Where it's important to know is that the donor, me gifting you money, I can take up to 15 grand per recipient that gets a gift from me and actually deduct it from my tax return. So let's say. So
it's an actual, hold on, it's an actual advantage to gift your family members their down payment tax wise?
15K. So so here's something that's really cool, and you can actually work it up to 60 grand as a gift fund, as a tax deduction for a donor. So mom and dad are going to gift John and Sue, who are buying a house, money. Okay. Dad gifts John, dad gifts Sue, daughter-in-law, son, right? And that's 30K there. Mom also gifts John 15K and Sue 15K. There's another 30 grand. Now I've got 60 grand of a tax deduction. And I don't have to pay that. Yeah. I confirmed it 3 times with my CPA. I'm like, okay, I'm going to put this live. Are you sure? And she's like, yeah, people pay me a lot of money to do taxes. Yeah, I know this. I'm like, okay, I just wanted this.
Wait, I have never heard of this.
Yeah, so you can gift, and here's what's even more funky. I can do it December 31st for 2021.
Yeah.
January 1st, I can do it again for 2022.
So if you have parents that are like on the fence, or grandparents that are on the fence to gifting you money,
uncles, cousins, it doesn't.
Okay, yeah. So that's my question. Who is allowed to gift you money for a down payment?
I probably shouldn't say this live, but I don't really care.
Everybody cover their
I just
ears.
don't care. Yeah, cover your ears. It's supposed to be somebody with a family tie to. However, the government actually doesn't care. I can gift you money and get a tax deduction for it. You can be a friend and I can gift you the money. I know, totally fine.
Wait.
That's the IRS though. That's the IRS.
Uh-huh.
From a lender perspective, you have to be
Uh-huh.
an aunt, an uncle, cousin, all the things that are tied to a family, which makes no sense to me. Domestic partners are fine. Mother-in-law, daughter-in-law, son-in-law, cousin-in-law, whatever the hell you want to call yourself, as long as it's identified as somewhere along the family chain, it's fine. What is really weird to me is that
How do they fucking verify that?
They don't. That's why I said I'm gonna say this out. So everybody's your goddamn third cousin, basically. Honestly, it's an archaic rule though. I'm gonna tell you that. I mean, at this point in life, it shouldn't matter as long as the IRS is okay with it. The government is basically backing the loan. They should be fine with it too.
Let me just tell you, every single time we do one of these, I'm like, what? I'm sorry,
Good.
what? The last one was the buying a place for your parents that can't afford their own place. And
yeah. Oh, I've got another one for you.
Okay. Am I ready?
You're going to shit your drawers.
Do I need diapers? Probably.
Yeah.
Okay, go.
Yeah. No, I want to get back to down payments.
Damn it. No. Okay, fine.
Another popular down payment option, and this is more of income, so it's income related, meaning you can't make too much money, is down payment assistance programs. The money is available. I've got one grant that's up to 70 grand for down payment.
What?
But you can't make too much money. That's the problem I have run into all the time with these programs, is the real estate prices are here, and I need the income from somebody to be higher to get into these higher price points.
Yeah,
so,
like the mat, like there's no intersection where it actually meets, and so they're like, you can only make 30,000 a year, and we'll give you 70,000. You're like, cool, I still can't fucking afford anything, you asshole.
Right, that's basically right. So that's been the part that's been frustrating. I work a lot with Portland Housing Center, and I told the manager, I said, I would love to use your program. I know you've got the money. You've been trying to give it out to everybody, but these income limitations are really what's screwing everything. So there's nothing that can be done about that. That's
what incomes is sorry, go ahead. The income is for.
It's produced by the government. So the government comes out and says, okay, based on this census tract in this county and this state, you can't make XYZ per person of family. So it's like 1-person household, 2-person household. So anyways.
So what is it just right now for a 1-person household to be able to I mean, you don't have, I mean, it's not a big deal.
I don't have it in front of me, but it's like in the 53-ish, 56K range.
God,
the prices are $600K here for a house. I mean,
that's
see what I mean?
Very frustrating. Yeah, so it's very, very, very frustrating.
Really move far east and really west to get into these programs. I mean, even St. Helens, those kind of areas, just where the price points aren't as dramatic. That's.
I think about that.
It is an option for down payment, but it's pretty annoying, actually.
It's really frustrating because I feel like people are like, oh, down payment assistance. And I'm like, good luck with that. I'm sorry. It's not realistic is the problem.
Yeah.
I would love to help with that, but it's just not realistic. Okay. So we have talked as little as 3% down, where you can get gifts from evidently fucking everyone.
Everyone's your cousin.
Everyone's my cousin. What else? What are we missing?
We've covered every pot you can pull from for down payment.
Okay.
Really, the only 2 acceptable sources are, I'm not going to take a cash advance on my credit card. No, please.
Please don't do that.
And then I've got money in my tampon box. That's a big no, too. So, people that are trying to do, and I have like a lot of stylists and tattoo artists that I work with, and they get paid a lot in cash, right?
Yeah.
And they don't necessarily put it on their tax returns. They just kind of take it, which is part of the industry. It's just part of the thing. So really the only way we can document that cash is if you stick it in your account. Well, if you tell me, I don't want to do that because I don't want the IRS to get wind that I'm, stashing my cash tips. Well, you know what? Pick your poison here. What do you want? Do you want a house and can we use it, or you don't? And then don't tell me about it.
Yeah, I think I have that conversation a lot. I'm like, you either claim all of the cash that you make and you know that you're just going to pay those income taxes for a year or two just to fucking buy your house and then do whatever the shit you want. That's the thing is like, once you close on the loan, as long as you make your payments, they don't give a fuck. They're like, just give me my money. Like, literally just give me my money.
Yep.
Which is like another, like that's another reason why the mortgage insurance is like, it's such a racket. People like, they think that it protects them. I'm like, no. It just protects the bank, period. That's all it is. But you can, unless it's FHA, you can get it off. I think
So no, So I want to go back to just conventional. So we'll put FHA aside. So on a conventional loan, you can technically do 5% down and buy out the PMI.
I thought it was at 10%.
It is. It's at 5% too, but it's so expensive that you're not gonna be able to recoup that money. So the monthly is a lot cheaper option than just waiting the 2 years to get rid of it.
Mm-hmm.
The 10% down option though is the super savvy way to go because the cost gets cut in half. Exactly.
That's what I did.
The cost gets cut in half. Oftentimes you can finance it if you're not exceeding the maximum loan amounts, or you can pay it in cash. And then you never deal with the topic again, ever. It doesn't matter what happens to values. It doesn't matter what happes to anything. It's just you never deal with it again. So,
and that's what I did. And I was like, it was like, I mean, it was more like, I did 10% down on this house. Thank you. And then you were like, oh, why don't you just pay off the PMI? I think it was like $5,000 extra. And I was like, I can find that to never have to think about it again. I will find that. I also want to talk about, this is something that I think a lot of people from, Seattle get shocked about a bunch, is that the conforming loan limit. So basically the maximum amount of a conventional loan you can get right now is $548,250. So
in Oregon.
In Oregon. Now in Seattle, it's like, I don't know, 750 or something like that.
It's way higher, yeah.
Because they have much higher house prices than we are. So I've had a couple times where people that were like looking in Seattle, totally priced out, had still like $200,000, and they're like, oh, well, in Seattle, I was looking at like 950 houses, so I can get like an amazing 950 house in Portland. And I was like, except the biggest loan you can get for a conventional loan is 548, and then you add your huge down payment that you have because you work for some huge thing, then you're only up to 750.
No.
What? What did I do wrong?
I love you. What you're saying is absolutely correct for somebody who wants a 30-year fixed non-jumbo loan.
Okay, but hold on. Let me finish that off. Don't tell people that's not true.
That's not true.
Oh God, you're such a liar. So to get a 30-year conventional fixed loan, the loan limit is 548. We're just going to say 548,000. So anything over that, you need to get in cash for the price.
Yes.
In the very, very base. Except, okay, now you can go, because you can just call me a liar. I mean, you can.
You never lie.
I just dumb.
You never lie. You're always a straight shooter. Right? That's why everybody loves you. So you can do a jumbo down loan up to $1 million for a loan amount, not sales price, loan amount, and do 10% down and still kick out PMI.
Oh. Okay, so let's say I am debating whether I want a conventional loan or a jumbo, and the minute anybody says a jumbo loan, I freak out. I'm going to have a terrible down payment. The the cost of, or not terrible, terrible interest rate. The cost of it is super high. So we're gonna play this scenario real quick. So I'm like, ooh, I have $150,000 that was an inheritance, or I sold off some stock, I sold a child. I don't know how you got your $150,000. So, basically my budget with a conventional loan is $700,000 because it's 540. We're just going to call it 550 for now. Plus
Okay.
150 is 700.
Yeah.
Okay. But
Yeah.
I
Okay.
actually have better and more expensive taste than that. Now what?
Well, let's use your same scenario. Let's say that
Kate.
700. Oh man, seriously. Let's
You guys, my
say.
mom is here. Hi,
Oh, hey,
Mama.
Mom. Hey, Helen.
Okay, sorry. I got really excited. She never joins.
Let's say that $700,000 house needs a shit ton of work.
Mm-hmm.
And you're like, I'm not giving you 150 because I need to spend half of it for improvements.
Mm-hmm.
Okay, then the 10% down jumbo is the way to go.
Mm-hmm.
And you don't have to deal with the 548, 250. You just can't go above $1 million.
So what is let's say I have 730 credit and a W-2 solid job, and I decided to go from conventional to jumbo loan instead. What's the difference in like all the closing costs and the interest rate? And is it also 30 years?
It's not a 30-year fix. It's a 10 in one arm. You're not going to get a 10% down jumbo 30-year fixed. That's always 20% down.
Mm-hmm.
I like this product because it's fixed for 10 years. So remember in the beginning, we are talking about how your parents kind of cough down your throat about 20% down payment.
Mm-hmm.
This is another one of those old resonating things.
Mm-hmm.
I have to have a 30-year fix.
Mm-hmm.
Okay.
I mean, we're getting into some other shit right now.
I know. I'm just like, why do you need a 30-year fix? Well, because I don't want to worry about the rate. Fair. Okay. But in 10 years' time, don't you think some type of life adjustment may potentially pop up for you? You will refinance and pull cash out to do improvements. You'll refinance because the rates are lower. You'll sell it and move on. You'll turn it into a rental and buy another. I mean, there's so many things that happen in a 10-year span of time. I mean, if you could literally predict your life for the next 10 years, then I fucking want the lottery numbers now, right now, because that would be amazing. But really, at the end of the day, the 10 in one arm is solid. It's fixed for 10 years. It does not move. And it's priced in the 3% range or lower. So when people are like, I have to do a 30-year fix, non-jumbo, then they'll go to a broker who will say, okay, I'll take your jumbo loan. I'll give you this $548,000 mortgage, and then I'm going to give you a $100,000 second so that you're out of jumbo territory. Well, the problem with that is the second mortgage has an 18% rate cap. That's the same problem everybody got into trouble in 2006. Is having these first and second combo loans, and then the market shifted. And guess what the prime rate did, which is what the equity loan is tied to? It's shot up.
Right.
So honestly, why wouldn't you do 10% down, kick out PMI? You don't need a second mortgage that has any kind of, there is no second mortgage. There's no rate risk. So, I mean, I can go on forever about this, and I don't want to go down a rabbit hole with everybody because they're not here for that. But
I'm here for a rabbit hole, but everybody else is on here, and they're catching a ride. We're steering, so. So another question. One of the things that maybe this is an old wives' tale also, like what I hear a lot is like, you have to be on a W-2 job to get a jumbo loan. Mm-hmm. You have to have a certain credit score. You have to, like, there's just so many, like jumbo loan is going to be so much more intense. Tell me the lies.
There's three things that are super important for somebody to get a jumbo loan. It requires more skin in the game, so you have to do 10% down. It's not a 3% down loan like we just talked about. So down payment has to come from your money.
Can it come? Oh, it can't be
It
gifted?
cannot be gifted. No, the only
Okay.
time jumbo loans will accept gifts is if you're doing 20% down.
And if you have had that amount in your
Then
account for how long with the jumbo? Because don't they go further back?
no, it's 2 months.
So
Still 2 months.
if you like theoretically like your parents put some money in your account and 3 months later you go for a jumbo loan.
Then you have bank statements that show a balance of that amount. Yeah. It's when you hand me a bank statement that had $5 in it and now it has $105,000 in it, that's when it's a problem. So jumbo loans require that you have your own down payment money. You can get gift funds. I don't want to say you can't, because you can, but you have to have your own 10% down. Where you might want to get gift funds, and this is the second criteria for jumbo loans, is you have to have payment reserves. So let's talk about what that means.
Oh, so you have
Yeah,
to have like 6 months or something, right?
6 months payments. So
It's been a while
let's talk
since I've
about
done a
that.
jumbo. Okay.
If I do a non-jumbo loan at 548 or less, I can have $1 in my bank account and be okay. Nobody cares. However, if I go jumbo, I have to have my 10% down, my closing cost plus 6 months worth of payment. So if my payment is $3,000, I need another 18 grand to show as proof that I have liquidity. The bank will, no lender, bank, credit union, whatever you want to call it, will ever do a jumbo loan without showing that we're not draining your accounts to squeeze into a higher price deal.
I mean, it makes sense.
Yeah, that's the second one. The third one's credit score. So credit score minimums are typically 700. 720 is really the minimum with 10% down, though.
Okay. That makes sense.
The
Higher
more down
risk,
payment.
they
Yeah,
want a better credit
yeah,
score. Credit scores are a racket and also racist and
yeah,
basically
yeah.
new. But we have to work
It's,
in the system right now. So
yeah, with 20% down, you can have it as low as 700. So you can be self-employed.
but I mean,
That's
okay.
not a problem.
Okay. But 20% down on a jumbo loan is a fuck ton of money.
Yeah,
I don't know many people that have the 20% on top of the jumbo. So the 10%
yeah,
makes a lot more sense
yeah.
for.
That's if somebody is getting a very large gift and they can do 20% down because they don't need 10% of their own money. They can just get a full flat out gift. But you have to also have closing costs and 6 month payment reserve. So where people get gift funds are 10% down. I have my own 10% down, but I'm getting a gift from mom for the reserves and also the closing costs. Now, here's the thing about the reserves. You don't give it to the bank. It's kind of stupid that we even have to do it because technically, okay, hey, mom, give me 18 grand so I can turn around after we close and hand it back to you. That's basically what happens, right?
Yeah, yeah.
So that's the way I mean, that is a thing, but it's kind of silly. But the reserves are important. 401k
Okay.
can be used for reserves, so that's not a bad
Okay.
thing either.
Yeah.
Yeah.
This is also fascinating. God, I learned so much from you. Michelle, I have talked, I think a little bit. I did an amazing Instagram live with my friend Tori, who is she does white homework, which is awesome. You should follow her. I'll tag her in the comments. But that's a whole other conversation. So I'm not going to get into the racism of credit scores now because I actually think I've had that conversation already.
Yeah, that's another racket.
Well, I mean, pretty much everything in the lending
Yeah.
industry and the real estate industry is racist, and pretty much the whole world. So as long as you come in knowing that, like, it just makes it a little bit like, oh yeah, okay,
Yeah.
right.
Yeah.
She's nodding. Okay, man. Okay, the jumbo loan is fascinating, and I think I've probably discouraged people from looking into them, and maybe I will encourage them. Maybe I don't know if I've encouraged or discouraged. It just doesn't come up that much,
Yeah.
which it seems like it should.
Yeah. I mean, I don't know if I really want to shift gears because it is getting a little bit away about down payments. Remember I said I'm going to blow your mind with this new one?
Oh, go. Blow my mind. You've already blown my mind. Like, I
Yeah.
have no mind left.
So we have a portfolio product. So it's our jumbo loan, basically, same product, 10 in one arm, where you can buy a triplex or fourplex and put 5% down.
Stop.
Stop.
You
No,
with me
I know.
again? We've
I know
talked about this. When did this happen?
This just recently happened. You can do 5% down.
Just kidding. I'm back.
Oh my God. Yeah. I know. And I was just like, of course it's coming to me after our duplex class. So you have to have 5% of your own money. You can't get gift funds. But we have a portfolio loan for it, and it's owner occupied. As long as it's owner occupied, it has to be owner occupied. So
that's fucking amazing. Because like, that's the thing about when it's like a duplex, it's not quite enough. Like if you're in one side and they're on the other, like it helps with the payment, but not much. But if you can get like 4 or 5 of those motherfuckers paying for your mortgage, like that's when it starts happening. Like,
seriously.
Okay.
Huge payment.
Shit.
Yeah.
Huge payment.
Huge payment. Huge. But you've got 2, 3, and 4 units to cover part of that.
Yeah, there was this I think it was a 4-plex or a 5-plex, one of those like brick mid-century side by side. I think it went for like $1 million on like 20th and Prescott. And
was it duplex?
It was a 4-plex, 5-plex.
Oh, 4-plex. Yeah,
4 or 5.
Yeah, because the loan limits are way higher, and it has to be a Fannie Mae loan limit. So that's the first rule, and it has to fit portfolio. So portfolio has a hard stop on debt ratio. You need cash reserves, and you need a higher credit score. So 720 is a minimum. You need to have payment reserves. So everything I just talked about applies to this program, except if I go conventional, I got to put 15-25% down payment, but now I can go to Jen and get a portfolio loan and do 5% down. Hello.
Yeah. Oh Lord, this is all a lot. I think that is not for everybody, but there is definitely for a couple of my people.
Yeah, we can do another class just on that product if you want to.
God damn it.
Well, you told me to keep you informed. I'm keeping you informed. So
yeah. Laura, do you use Jen Leon? Because if you don't, then I'll let you guys connect then.
The cheat sheet's in here though, Laura. Sadly,
you just gotta harass Jen.
Yeah,
there ain't no cheating.
She knows how to find me. So yeah, I mean, that just rolled out, and I don't know when it will change. I mean, things change all the time with portfolio. That's the thing. So I tell people, I'm like, okay, when the money starts running dry, I can tell you this product's going to be going bye-bye. So
yeah, that's fair.
Yeah, it's but that's that. My phone has been ringing off the hook this week for that product.
I mean, that makes sense.
Because people are trying to go FHA and do 3.5% down, and guess what? The rents don't sustain.
It just doesn't make any sense. It just doesn't make any sense.
On a portfolio loan, that's not a thing.
Oh my gosh, I have so many people that want to do it, and like that's the that has been the disconnect in the past.
Yeah. Well, FHA, you can go with a higher debt ratio. You can take up to 50% debt, but on portfolio, it's a flat 43.
Okay.
So that means all your debt divided by your income can't exceed 43%. That is a hard stop on portfolio. They will not go 43.01 on it.
Yeah.
So those are just things.
That's with your house debt too.
Yeah. That's all. But you have rents. I have rents from unit 2, 3, and 4.
Yeah.
That I can help reduce that debt down.
Man, my brain hurts. I think I need more Oreos.
That was a segue from down payments, and I'm sorry, but
but it's an interesting, because it is something, once again, us thinking that you need a lot more down payment than you do. So, okay. I think I've been trying to keep them at a half an hour. We clearly went to 45 minutes, but I learned a flying fuck ton as usual. Teach me, make my brain big.
Well, I will let me know if you want to schedule a class on that. I'm here
Okay.
if anybody ever has any questions. You can send me a DM or you can connect with Lauren and, whatever. But these classes are for you to learn something new and take away something positive, right? That's why we
No,
do
they're
them.
only for me to learn.
Well, shit, we can just go have drinks and I'll just pound you down with guidelines. But
Dirty.
yeah, it's good because I feel like things are. I think
Sorry, it took
things.
you a second.
I know. Sorry, I was like, wait, that just like processed. Well, that did take a good time.
Oh,
Um,
Lord.
but things are loosening up, which is a good thing. So I think the jumbo world is just where we're at now in our
Mm-hmm.
markets,
Mm-hmm.
and this new news is pretty amazing. So
Great.
I know
I love
nobody
it.
else. I know nobody else is doing this product, so that's why my phone is ringing off the hook.
I'm sorry for adding
Yeah.
to that.
No, I like it. It needs to be given to people. They have to
Yeah.
take it while you got it. So
All right. Well, I'm going to go. I've had a real rough few days, so I'm going to eat some Oreos for dinner.
nice.
Yeah, it's
Good
going to
for
be great.
you.
Thank you.
Yeah. Yeah, you're welcome.
Maybe
All
some
right.
whiskey. I feel like that's a good pairing.
Yeah, it sounds like heartburn.
Oh, that too. Okay. Thank you so much, as always, for blowing my
Well,
mind and making me laugh and sometimes a little angry because I feel so dumb.
no, there's no. You know what, Lauren? There are some days where I'm like, oh my god, I need to read my shit because
Yeah,
I'm just like, it changes so
it
fast. And
does. Yeah.
honestly, if I
Yeah.
literally emailed you every change, you would probably really hate me because you'd be like, are you serious?
I would block you. I'm like, lose my
Yes,
number.
right. Yeah. You'd be like, okay, that's 95 emails. It's, this is just a good change. Probably get the news out so that if you got some
Okay.
clients or, it's a good one. So
Okay.
I
Great.
don't want you to miss it.
Yeah.
Thanks everybody for
Okay.
joining.
Y'all rock as usual.
Bye, Lauren.
Bye.